Hey guys, Mike here. So today we're going to look at an indicator that actually might tell us where the economy is going, and where the economy goes, the stock market usually likes to follow, okay? So if the economy is going downhill, the stock market will eventually end up falling as all the earnings calls become crap because the companies have made no money and hadn't, met their expectations, right? And so this one actually has not been this low since 2011, and the drop it had in the last report caught people off guard. I've done a terrible job at covering this for you guys and bringing this indicator to you, so I will do a much better job from here on out. I give you my word on that. And it's important because me, I like to look underneath the hood, right? I hate people that just present like this big number to you and they go, oh well, this is what it is, instead of actually diving deep into what was behind this, right? And so it hadn't been this low since 2011. So what am I going to do? I'm going to go back and look at 2011, see what was going on, and then what was the stock market doing, because that's what we're here for, right? What was the stock market doing during that year? And you're going to notice some similarities from what's going on now to then, and then I'll show you the stock market, and then I'll give you a much brighter picture on what happened after 2011 that hopefully we got to look forward to. And then I'm going to end this video with, anytime I see an interview from a fund manager who is brutally honest, I have to bring it to you because it's rare that it happens. But when I saw it today, I said I'm going to put it out there to you. Get your thoughts on it, because it just doesn't happen very often, and I love the looks on the people on the looks on the faces of the other people that are on the panel, because they're like, "Oh my God, did he just say that on live TV?" And so we'll end with that right there, and let me know your thoughts. Okay, so if you get anything out of it, hit the like, subscribe button. Before I forget about it, you guys always want me to update you. There is a Valentine's Day sale, 30% off at Tip Ranks. You can go ahead and click on the link down below if you want to take advantage of that. They got it going on till Wednesday, okay? So let's go ahead and get into this indicator. And so getting into the numbers first, we're talking about the Consumer Sentiment Index, right? So the consumer sentiment in February was 61.7. And if you can see from December, it's been downtrending since then. And if you look, it hadn't been that low since 2011, so that's not a good thing at all. And you can see by this chart right here that all it's been doing since 2021 started is just downtrending, okay? And you're probably asking, what is consumer sentiment? So of course, let's just read it off for you. Consumer sentiment is a statistical measure of the overall health of the economy as determined by consumer opinion. That's us. It takes into account people's feelings towards their current financial health, the health of the economy in the short term, and the prospects for longer term economic growth, and is widely considered to be a useful economic indicator. And to keep it simple, the happier we are, the more confident we are in our government and the economy, the more we spend, the less we save, right? So that means what happens? In turn, come earnings calls, all the companies are like, this is great, we hit all our numbers because people were spending like crazy, and we're going to go ahead and forecast even higher, right? Because they're just busting out the credit cards and taking out the loans and all that good stuff, okay? And so obviously if the number's lower and downtrending, it means people are trying to save more and spend less because they're just unsure about the future or how much prices will continue to increase, right? And so because unemployment rate is so low, maybe they're worried about if they lose their job, where are they going to find a job at? Unemployment rate is like 3.6% or something, right? It's almost non-existent. We're at full employment, excuse me. Maybe that has something to do with it, but this is big for understand where the economy might be heading, and the next report really will be huge to see if it's still downtrending or going lower. And this drop was lower than what was forecasted, and that always freaks people out, right? Because consumer sentiment is important to the stock market and the economy overall, okay? And so that's why it's important for us to look at. That's why I'll bring it to you more often for sure. But then I wanted to look at it and say, okay, so what was going on in 2011, right? Why is consumer sentiment back in 2011 the same as it is now? What's going on? It should be higher, right? I mean, wages are increasing, and we're coming out of this pandemic and stuff like that, and people are getting travel. What's going on? And so I'm going to show you some things. You tell me if this doesn't look eerily familiar to what is happening now. First and foremost, we got inflation, biggest rise in CPI in 3 years, and it went from 1.25% to almost 4% in less than a year. Does that sound familiar right now? And then you look at the rates. The rates are sitting at almost zero. It was like 0.09% right there in the middle of 2011, I believe it was. And then, of course, what was the Fed doing? They increased their balance sheet from about 2.4 trillion to almost 3 trillion. in 2011, and of course proceeded to increase it even more, going up all the way through 2014. And the only thing that was different back in 2011 was the unemployment. Unemployment was really high at 8.5%. And of course, it was on a downtrend at that point in time. I think it came in, it was much higher than that. But anyway, it was on a downtrend at least, but it was still high. And of course, this leads us to what was happening in the stock market in 2011 with all this economic data out there and consumer sentiment in the toilet. Well, I don't think it's going to surprise you at all, but this may be what we got to look forward to this year. And as you can see right here, I pull up the QQQ all the time, not the SPY, just because of the high growth stock thing. A lot of people who watch this channel like high growth stocks. So you can see extremely volatile, 8.3% drop, 9.23% drop. Then we get the big old drop of 15.3%. And we come back up, waver up. Nope, we're not done. Yep. Oh, nope, not done. Up, what? Way down again to 16%. Then, of course, we'll recover back up like we always do. Trade sideways, take another drop of 10.37%. And then, of course, we'll recover because that's what the stock market always does. Then we'll take another small drop to end the year. And so if you see, I mean, what are we going through right now, right? Big drop, kind of recovery. Nope, dropping back down, 3-4%, moving up. It's kind of like these W-shaped recoveries almost we're going through right now. And so, you know, and we hadn't even begun tightening in a way, right? I mean, the Fed's balance sheet, they'll stop, you know, buying mortgage-backed securities and bonds on, I think it's March 10th or March 15th, one of those 2 dates. And then we'll see if we get a rate hike, right? But, you know, it really hadn't even begun this yet. And consumers are still like, oh my God, I don't want to spend. And I don't really blame them, to be honest with you. But some people are probably like me in the fact that they're not spending because they're worried about the economy so much. They just refuse to buy crap, you know, at 100% markup, right? I mean, I know that's me. I've cut out certain things and gone and found different things, replaced things I was using. I mean, hit me up in the comments if that's you. But on general principle, I'm just not going to pay 100% markup on stuff. That's ridiculous. Even 50% for that matter. It's the same product, right? And so, I don't know. Maybe it's just me doing that. But that's what we've decided to do as a family because I just don't like being ripped off, okay? And so, you know, but the good news is this. What happens to the market? What happened after that year? Okay, and that's why I believe we can get through this year and maybe in the beginning of next year. But what happens to the market? It booms. As you can see by the chart of the QQQ, the index went up by 102% from 2012 to the midpoint of 2015. And that's the index. The stocks went up way more. And so, you know, and here's the kicker. Obviously, let me get back to consumer sentiment just for a second. The next report will be a big one, right? If it continues the downtrend, that is not a good sign for the economy, okay, or the stock market for that matter. And so, you know, but here's the thing. The stock market, is it going to be a volatile year? Probably so. Probably one of the most volatile we've seen in a long time. But what's going to happen and why I show you that chart? Because that's what always happens. You look at any period, right? You get these volatile years, and that's why I'm trying to be detailed with you. I'm trying to break it down by year for you, not give you this stupid spreadsheet I get so tired of seeing put on YouTube. And you know, it goes, oh look, after a correction, this is what this period did. And it's like a 5-year period, and it went up 100%. But they don't break it down by year, right? And so, because when you're in the middle of a storm, yeah, you know the sun's going to shine eventually. But damn, can you give me an idea of how long the storm's going to last, or what it even might look like? That's why I try to break it down by year for you, right? I've showed you 2018. I've showed you all the years now, broken down. Literally, if you've seen the videos. And so you see the rough years, and then there's those great years, right? That's going to happen because it always does. It just always does. That's the way it is. Unless we go into some freaking depression we don't know is around the corner. Who knows? Could happen. And then maybe we head down for a long time. But here's the other reason why you know. And always remember this. Why does the stock market always go up? Because the rich are in it. The rich own the stock market. They own the vast majority of stocks. Do you really think they're going to let their money sit around and not make money for a long period of time? No. No, they'll sit there and go through the chop and get their fund managers to do what they got to do. But they want to see it go up, and it will, because they will drive it up and manipulate it up. That's the way it works, all right? I mean, not saying it's honest, but that's the way it works. So just remember that. The rich are not going to sit there and allow their money to do nothing for a long period of time, okay? And so we'll see what the next consumer sentiment report says. We'll see what it says about the economy. How are you feeling in the comments? Are you confident in the economy that we're opening back up? And are you spending like crazy? Or are you saving more? Okay. And then the last thing I was going to leave you with was, this interview with this fund manager this morning, it just made me, I was like, oh, you rarely ever get honest answers or just bluntness. And yeah, he pretty much put it out there. And a lot of them don't answer like this because they need you to, send money to their fund. That's why. But let me know what you think about it in the comments right here.
Now, what people haven't mentioned is that we have the lowest consumer confidence reading since 2011. So the fire hose opened up as people came out of their homes, they spent, they engaged services. But during that time, we've seen the cost of those go up dramatically. So even the most flush, and I'm not talking about the upper 1%, most flush consumers got to be feeling it now, and there'll be issues. But let's not just talk about Ukraine and Russia. Let's focus on China as well. China had been very noisy in terms of their issues with Taiwan, and they're only taking a step back now because the Olympics are going on. So Putin and Xi, they've met. And she said, hey, we're wishing you all the best in Ukraine, and why don't you keep that going? Because right after the Olympics are over, we're going after Taiwan. And that's going to be the real mother lode because so much commerce goes through Taiwan, particularly technology. So to me, best case, the market risk returns in balance. And I believe that it actually trends more towards the lower in terms of the risk profile and sort of completely discounts the upper end. So why be in a rush to buy stocks? Sure, they'll be higher in a year or 2 years or 3 years, hopefully. They always are. But in the interim, you can get a much better entry point if you keep cash. As a matter of fact, if you take some profits off the table here and hold some more cash, and that's my bet.
How much cash are you talking about, Steve Weiss?
So I've been in between 50 and 70% cash for a while, an extended period of time. And every time I go to buy something, I could have gotten it lower. So every time I've sold something, it's gone lower. It's been a good sale. So I just don't see that ending anytime soon.
And so a couple things there. One, I think he's spot on about China. I think China is sitting back and waiting to see what we do when it comes to what Russia is doing, right? And because they definitely, I don't know if they're going to go into Taiwan or what the heck they're doing, but that's going to be something to watch. I think that's like the next event you got to watch and say, okay, what's going to happen here? Because that would be much worse off than what Russia's doing right now, right? Because he is right about the tech and everything going through there. And so, I got my opinions on all that as far as, when it comes to sending our soldiers places to fight. And I'll just leave my opinion to myself, being a former soldier myself. And so, it's one of those things. Now, as far as him cash-wise, yeah, when he said it, I was very surprised. I've seen him interviewed a lot, and I've never heard him say that, actually. I've heard he's been short some positions, long positions, but actually disclosing 50 to 75%, that was kind of surprising because I thought at the beginning of the year. And so it was just interesting to see it, and the faces on the other people were just hilarious to me. I found a different interview with kind of you show the faces of the people on the panel with him. They're just like, what? Because that's a lot. I mean, because this guy has a lot of money. And so, it's just one of those things. So it was just fun. So, just wanted to put that out there. Let me know in the comments what you think about this stuff. And are you buying all these dips? Because there seems to be a whole lot of them. So don't forget, if you want to sign up for the 30% sale right there, the Valentine's Day sale for tip ranks, hit that link down the bottom, guys. Hope you got something out of this. Hit the like, subscribe button if you did. Really appreciate that. And I will see you guys tomorrow.